Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Micron Technology.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. For years, Micron was defined by, well, just one word: cyclical.
Right, a memory commodity stock. If the economy sneezed, you just knew DRAM prices were about to fall off a cliff.
Exactly.
Yeah.
And that memory is still pretty fresh in people's minds. But the story now is completely different. The market has officially re-rated Micron as a major growth name.
And it's driven almost entirely by the AI supercycle.
Fundamentally, yes. That transition from, cyclical commodity to secular growth champion is the whole story here.
And the financial turnaround is it's undeniable. We're looking at a reported Q1 for fiscal 2026 revenue of about, $13.6 billion?
$13.6 billion, and that's up a huge 57% year over year. But just looking at the top line, that doesn't really tell the whole story, does it?
No, not at all. You have to look at the segments.
That's where you see the structural change. Look at cloud memory revenue. That segment just exploded. It was up 100% year over year.
Wow, 100%.
Yeah. And that jump tells you that every new AI server going online is demanding way more advanced memory than the last one.
But it's not a narrow hit, though. We also saw huge strength across mobile, client, and even automotive. It seems like a broad acceleration.
It is, but AI is definitely the rocket fuel here.
Right.
And management, they're certainly treating this as the new reality, not just some temporary spike.
Right. Their Q2 outlook is guiding for, and I'm quoting here, substantial records across revenue, gross margin, earnings per share, and free cash flow.
That confirms it. I mean, they're basically telling the market we're in an accelerating multi-year uptrend.
And that belief, that multi-year story, is why the analysts are projecting such just massive numbers for fiscal 2026.
It is. If you step back and look at the consensus estimates, we're talking about roughly 89% year-over-year revenue growth.
Which is already huge.
And a truly staggering 278% year-over-year expansion in earnings per share.
I mean, that forecast alone really explains the rally the stock saw last year. When you have triple-digit EPS growth on the horizon, the old cyclical tag just falls away.
It has to. But, growth of that magnitude requires huge upfront investment, especially in manufacturing.
It absolutely does. The company recently raised its capital expenditure plans for fiscal 2026 pretty significantly.
Yeah, they boosted the target from $18 billion up to a massive $20 billion.
$20 billion. Just to put that in context, that is roughly double their spending from the last big cycle peak. It just shows the confidence they have.
In previous cycles, that kind of spending would have terrified investors. So how is the balance sheet absorbing this massive push without just sinking into debt?
That's the key difference this time. They are operating from a position of real financial strength.
Their operating cash flow is described as robust, so sufficient to fund this CapEx, which is focused on HBM, their 1-gamma DRAM, and G9 NAND.
And they're doing it without really stressing the balance sheet.
Right. And their ability to deploy all this capacity is also being significantly de-risked by, political tailwinds. That's an advantage their rivals just don't have to the same degree.
You're talking about the CHIP PS Act.
Exactly. Micron is the primary U.S. beneficiary. They have billions in grants earmarked for their megafabs in New York and Idaho.
So that public support just offsets a huge chunk of the upfront cost.
It effectively lowers the barrier to entry for them to expand domestically. So you've got robust internal cash, government subsidies, and the confidence to invest $20 billion. It's a powerful combination.
Okay, let's pivot to the competitive landscape. The moat here isn't just about scale or subsidies, it's about the tech, specifically in HBM. So what exactly is high bandwidth memory, and why is their lead so vital right now?
So HBM is the super specialized memory that sits right next to the cutting-edge AI chips, like the ones from NVIDIA. It's like the ultra-fast, short-term memory for the AI.
Okay.
Their HBM3E 12-high stacks are fully qualified for the current generation, specifically NVIDIA's Blackwell GPUs. So that puts them right in the top tier for performance.
But the real differentiator is efficiency.
That's it. It's the power efficiency. Their advanced DRAM strategy, now moving into the 1-gamma node, gives them a huge power advantage. Industry analysis suggests they deliver about 30% better power efficiency than competitors.
30%?
Think about that. In a giant data center running thousands of GPUs, 30% power savings is millions in electricity costs. It makes their product almost a mandatory choice for power-constrained AI providers.
That's a huge competitive weapon, and it gives them leverage. The most fascinating bit of info I found, though, is that Micron's entire 2026 HBM supply is already sold out.
Yes, under long-term price and volume agreements. For a memory company, it's unprecedented.
It means they have guaranteed demand for their best, highest margin product.
And it means they're largely insulated from any short-term price volatility next year. The price is locked in. That shuts out rivals and just shows a demand urgency we haven't seen in this sector for decades.
We also can't ignore the geostrategic advantage. That U.S. heavy manufacturing footprint, that's becoming a major differentiator.
It's a massive tailwind. Western hyperscalers are increasingly favoring West-only secure supply chains. This just solidifies their relationship with companies like NVIDIA and the big Western cloud providers.
The market has definitely rewarded this whole narrative shift. The stock rallied, around 239% in 2025? It just broke out of all its prior ranges.
And the sentiment is still really constructively bullish. We saw this when they announced that $100 billion New York fab. The shares actually rose about 4.5% on the news.
Which shows the market now rewards that kind of long-term strategic spending instead of panicking about the cost.
Exactly. And analysts are keeping pace. After that fab announcement and a credit rating upgrade, we saw at least one major price target hike from 290 all the way to 390.
So there's real confidence in this multi-year AI memory story.
Yeah, and the technicals confirm it's still in accumulation phase. The stock is trading well above its moving averages, and any pullbacks are seen by institutional capital as buying opportunities. It feels like the middle of a move, not the end.
Okay, so let's unpack this. No stock that rallies 239% in a year is without major risks. We have to challenge the bull case.
Of course.
The primary, the existential risk for memory stocks has always been the cyclical downturn. At its core, memory is still a commodity. Overcapacity could eventually crush pricing again, couldn't it?
That is the #1 structural risk, and it defined Micron's entire past. We all remember the pain of 2018 and 2019, but management is reporting strong mitigation measures today.
Like the fact that 2026 HBM supply is fully committed.
Right, under those long-term contracts. And DRAM and NAND inventories are actually below target levels right now. The consensus is that this upcycle probably have multiple years left to run.
But how does the new product mix actually hedge against that cyclicality? I mean, in the past, Micron was mostly selling commodity parts that anyone could make. Is HBM really different enough?
That's the critical difference. HBM isn't a fungible commodity like standard DRAM. It's a highly specialized, vertically integrated product. The demand is driven by the AI build-out, which creates this premium tier that really didn't exist before.
Okay, another risk I see some bears talking about is competition for investor dollars. While Micron's performance is great, some argue that, say, GPU leaders like NVIDIA might offer greater perceived stability in 2026.
That's a relative performance risk, not an absolute one for the company itself.
Yeah.
Even if a rival has a better year, the whole HBM market is forecasted to just grow exponentially.
Right.
Some analysts expect it to jump from about $35 billion last year to over $100 billion by 2028. Micron's tech edge and booked capacity mean it can capture massive earnings growth regardless.
And finally, valuation and insider selling. We did see some light insider selling in early January. Well, that's probably typical profit-taking. Skeptics say the stock is priced for perfection.
I think typical profit-taking is the key phrase there after a rally that big. The stock isn't cheap anymore, that's true, but the valuation seems anchored in that tangible accelerated earnings power we talked about.
That 278% EPS growth forecast.
Exactly. The earnings ramp is still outpacing the share price appreciation, which is why analysts are still raising their targets.
Okay, so looking ahead, what should listeners be monitoring to confirm this momentum?
Well, the immediate catalyst is the Q2 fiscal 2026 earnings. That's likely in mid-March. And since management has already signaled record results, any upside surprise on HBM pricing or bit growth could be a significant mover.
We should also listen for updates on their product roadmaps at industry conferences. Confirmation that their HBM4 ramp is on schedule for the second quarter of 2026.
Yes, and progress on the 1-gamma DRAM production. Those are vital execution checks. And critically, keep an ear out for any language that says 2027 HBM supply is also getting pre-sold. That would be a huge positive signal.
So to summarize, Micron is really the de facto U.S. champion of AI memory, backed by tech leadership, political tailwinds, and that fully booked capacity.
It's really shaping up to be a multi-year hold opportunity ideally 3 to 5 years, to let you capture the full breadth of this AI memory supercycle.
The key takeaway for me is that Micron seems to have finally navigated its cyclical past. It's locked in a multi-year secular growth path through, I think most importantly, that technological leadership and power efficiency.
That's the analysis. We know they've locked in 2026 supply, so demand isn't the issue. The real variable moving forward isn't demand, it's execution. It's yield. Can they actually execute this massive capacity ramp faster and more efficiently than their rivals? That's really the big question for the next 2 years.
That's it for today's analysis of the market. Don't forget to subscribe, like, and comment below so you don't miss our next stock analysis.